with everybody. And if you have a question, either show yourself and raise a hand or stick your question in the chat box. And we'll be able to get to everybody's questions today. Again, we're just so grateful to have this opportunity to speak with two professionals in this field.
Hello, everyone. Hope everyone's doing well today. I don't like, do I go on? Do I? So I'm glad that everyone was able to join us. And today we're going to talk about credit. Credit can be a good or bad thing. Don't think just because you have a little card that there's always money on that, because sometimes there's not. So you have to learn how to control and what to do with it. So Tara, do you want me to share my screen and you go over? Do you want to share yours, or what would be easier for everybody to learn or to read the material?
You can, if you want to present the student guide, that would be fine.
I can do that. Make sure I have the student guide up. I hope everybody can see that.
Yep, we're good.
Make it a little bit bigger. Okay.
All right, so do we just want to go ahead and jump in?
First of all, does anybody have any questions about credit, about spending, about what we're going to go over? I can't see the chat with me sharing, so Tara, I don't know if you have the chat open.
The chat, yes. Okay, I don't see any questions yet, so we'll just go ahead and kind of jump in. Basically, today we're going to be talking about credit and kind of the pros and cons of using credit. Decisions about credit, you know, are going to be made throughout your adult life, and even as you kind of move into your late teens and early 20s. You know, a lot of people use credit cards to buy goods and services, or taking out loans to pay for college or cars. And decisions that we make in these cases can have really important consequences. And today we're gonna, you know, talk about the concept of credit, with special attention paid to the advantages and disadvantages, so pros and cons of using credit. And then we're gonna talk about a couple of different types of loans, like mortgages, car loans, college loans, personal loans, and credit card loans. So we'll have a lot of information to cover. If anybody has a question, don't be shy and go ahead and raise your hand if you need us to stop and go back over any of this. And then we'll just kind of talk through a few of these concepts and talk about some questions.
Hey, we do have one question. Would you mind going ahead and defining credit? What is credit?
What is credit? Who, does anybody want to answer that question from the class?
Again, feel free to unmute yourself and just sort of kind of holler out.
Anyone at all?
Go ahead.
Credit is borrowing money, essentially, and you can build credit and borrow more, and we'll talk about how that might help you a little bit in the future. But let's say we'll use the example of a car loan. You know, a car might cost, you know, $10,000, $15,000 to purchase, and maybe you don't have $10,000 or $15,000 laying around in the couch cushions. I know I don't. And so even though I have a job, I might need to ask to have the car first and then pay for it over time. And so a company will look at my credit history and see if I'm a good risk or a bad risk, and then make a decision to lend me the $10,000 or $15,000 for the car. And of course, then I'll make payments over time until I pay it off, which sounds great and is great. And it's nice to have that option, but there's then interest that goes along with the credit, because people aren't in the business of just giving away free money because they're nice, right? There's business involved. And so usually there is an interest rate that affects that $10,000 or $15,000. And I might end up paying $20,000 over time for the actual car, based on the interest rate that I get. And we'll get into that a little bit more. So anytime you're borrowing money from someone that's, not someone usually there's a little fee that goes along with that. And of course, they want to make sure that you are credit worthy in order to lend you a big chunk of money like that.
And how do you, this is Riley's question, do you have to have good credit? And like, how do they know that you're credit worthy? And then Josh is asking about insurance. Is insurance like credit?
Good, both really good questions. So do you need good credit to buy anything expensive in America? You need to have not bad credit is usually kind of where you start. You don't want to default on a loan, meaning you don't pay it back, and you start to build credit. Right now, probably most of you do not have credit at this time. So when someone will go to look at lending you money for a car, they will run your name through a credit bureau agency. There are 3 agencies, Equifax, TransUnion, and Experian are the names of those, and they all keep records of your payment history. So you will build credit over time, but where you don't want to go is to have bad credit. You need credit to borrow money, right? And you'll start out small as you kind of get into your adult life and start borrowing that sort of money. Sometimes people will lend you money right out of the gate, but the interest rates might be higher at that level until you can prove that you're good at paying your bills on time and things like that. And then Josh's question, insurance. Is insurance like credit? Not necessarily. You still have to pay insurance to, in case something happens. And sometimes they do look at your credit history when they're deciding what rates to give you. But if you're talking like a car insurance, it's a little bit separate from credit, but your credit can impact that. But credit can be like insurance to say, in case of emergency, I do have credit. Like if the other day when it was super windy, I have a great big tree in my front yard, and I was like really worried that it was going to fall and smush my roof. And if that were to happen, hopefully my insurance will kick in and pay that for the emergency, but I might have also needed to use credit to, help fund the rebuilding of my roof. So it all kind of goes together. And then there's a couple of other questions. Donna, do you want to take Ashley and Riley's questions?
I can't see the questions because I'm presenting.
Oh, you're right.
Sorry.
Right.
Let me see if I can.
Well, Ashley is asking, does interest affect the amount of credit that you have? And we're going to talk about how interest works a little bit throughout the lesson. But the amount of credit that you have can affect the interest rate that you get. So if they're going to lend you $10,000 or $15,000 to buy a car, then they will make a decision whether to charge you 4% interest, which is on the lower end, 2%. Some people even get 0% interest if they have really, really, really good credit, all the way up to 20% interest or something like that. If you're not necessarily a good risk, you end up having to pay more money in interest that goes along with that $10,000 or $15,000 based on your credit. And we'll talk a little bit more about that. And then Riley asks, do you get bad credit if you pay things completely up front? And that's a really good question, Riley, because you don't get bad credit, but you're not building good credit. And usually lenders will want to see if you have a good credit history. So you can start by maybe, you know, buying a less expensive car, or getting a credit card with a small limit on it, and then just making sure that you pay those on time every month, and you start building credit history over time, and then that will help your credit to be good. But not using credit just means that you don't necessarily have credit. You don't build good credit if you're not using it. Does that make sense?
But that doesn't mean that you can't pay your credit card off completely each month.
Correct.
So instead of paying things completely up front, you just pay it with a credit card.
All right, good questions, really good questions. Everybody's thinking about this, so I'm happy to see that engagement, so thank you very much. So we'll just go ahead and get into the lesson, and we'll start talking through some of these questions. And you can go off mute if you want to answer out loud, but we're going to talk about some of these things that we just went through as far as credit. So why would we use credit based on what we've just talked about? Anybody have any ideas?
So just to build trust so you can get loans from banks.
Yep. Anyone else? Credit allows people to obtain the use of money that we don't have. Like I said, I don't have $15,000 laying in the couch cushion, but I might need a new car. So I have to go to a bank and ask them to give me that money, and then I'll pay for it over a course of a few years. And then in return, people who use credit repay the amount they borrow plus interest, like we talked about earlier. So what are some of the advantages of using credit? And what are some of the disadvantages? We talked about a few things. To be able to make large purchases when you don't currently have the money needed to purchase it yourself. Yes, Josiah, that's exactly right. And then what emergencies are also good. And then what are some of the disadvantages? When we talk about credit, you know that this money isn't necessarily yours. And what's the business part of using credit?
You end up paying more because of the interest rate.
Exactly. So when people buy things on credit, interest rates and fees that you have to pay amount to a deduction from the money that you might otherwise use to buy things that you currently want. And then some people sometimes borrow too much. They use too much credit in relationship to their income. They borrow more than they take in from their jobs or whatever. So I would probably not go borrow enough money to buy a Mercedes-Benz right now, or a fancy bike or something like that. I would probably try to stay within the realistic limits of my income. And that's kind of where people can get kind of caught up, because you know, people will lend you money, but they don't necessarily check to make sure that this is going to be something that you're able to afford if you have good credit. So that's where you want to kind of keep your eye on what you do. If you use too much credit in relationship to your income, you might become overextended, and then you have really heavy credit card payments, and then you have less money to pay for food, transportation, clothing, other bills. And then items bought on credit can be repossessed by the lender if borrowers are unable to make the required payments. And so if I don't make my payments on my $10,000 or $15,000 car, they could show up with a tow truck and take it away in the middle of the night or something. And that would be a loss for me. So what kind of places give credit? What are some of the ideas about where you might go get credit? talked about banks, so we know, and car companies, credit card companies, payday loans, yep. What else? Credit cards, yep. And sometimes, let's say you have an emergency and you have to go to the emergency room, like you break your arm or something like that, and you have to go get x-rays and you have to see a doctor, and you know, you're in the emergency room for a while and you need a cast, and that stuff's really expensive. And sometimes we don't have enough money to pay for that all at once, because hospitals and emergency rooms can get really expensive. So sometimes you might be able to set up a payment plan with your doctors in the hospital, and that's another type of credit that you'd want to pay, because if you don't end up paying your bill, then they may send you to a collection agency, and that is a place that comes after you. It goes on your credit card report, and they end up making you pay them instead, and then you have a bad mark on your credit. So that's one of the lesser known types. And so then what is interest? That one's always a little bit confusing for some folks, because what does interest mean? We talked a little bit about it earlier. So the interest piece that's the business end. That's why people you've never met before in your whole life are willing to offer you $10,000 or $15,000 to buy a car. There's something in it for them. It's not just they're going to give you the money and not get anything out of it themselves. So they're going to charge you anywhere from 0 to 20% or more, depending on your credit, and you'll be able to pay them for the money that you borrowed. And that's where the lending money becomes a business. So who do you think most often wins in a credit transaction?
And when you say often wins, Tara, that means the individual and the party that we're borrowing for?
It could be either. So Josh is telling us that the bank usually wins, and a lot of time, you know, that is the case, depending on how the loan is, right, Josiah? Very good. Exactly. So it really depends. It's something that's a benefit to you as the borrower, because you wouldn't otherwise have the money to get a car, or, you know, pay a bill, or buy that cool pair of jeans with your credit card, right, that you really, really want. So that's the benefit to us, is that we're able to have things now that we might not normally be able to just get at that moment. So that's where we can win, but we have to make those decisions very carefully, because if we don't have good credit, or if we have bad credit, or not a lot of credit, that's when the company giving you the money will make the decision as to how much you have to pay them through the interest rate over the long-term, you know, loan. And then you'll make the decision to see if that is actually really a good place for you. But we do have some benefits of being able to have credit, just from a getting something that we need or want right away perspective. But there's always the business aspect of it. Yes, Angel, yep, bank. A lot of times it's the bank, yes. So how does risk influence the rate of credit? And what that means is the risk to lend us the money that we talked about before. So how does risk influence the rate of interest? Who remembers what we talked about as far as that is concerned? Am I a good risk to lend money to? Higher interest rates, Riley. Yep, if you have bad credit. So yes, so that's how they will decide whether or not you would get a 0, 4% interest rate, 10%, 20%. Just like Riley's saying, the higher interest rates, the less credit or bad credit that you have. So that's how they determine risk. And what they do are get reports from the agencies that we talked about. And your credit can affect you for years to come. It takes a really long time to clean up a mistake on a credit report. You know, anywhere from a couple of years to several years. So we always want to be careful of making those decisions in the spur of the moment while we're thinking about getting something new. And here's one that we haven't talked about. What is an unsecured loan? Does anybody know that?
And I think, Tara, the next two questions kind of go hand in hand.
Yes.
What is collateral as well? Does anybody know what collateral was? It was kind of earlier up on the pages.
Does anybody know what the word collateral is? For example, if you were trying to borrow a large amount of money, you know, to buy something expensive, Josiah has given us the definitions, right? Things that work alternatives if the person that receives the loan goes default. Yes. So like, let's say I want to borrow, you know, $50,000 for something. I need $50,000 in cash for who knows what. I am going to the bank and I will say, hey, I have my house that I own. Let's say you own a house. That's something that you could use as collateral to get $50,000 if maybe you're gonna buy a food truck or something and start a business. The bank will say, hey, we want to give you this money, but your credit's okay. And then maybe you can, you know, put up your house in case you don't end up making good food and your food truck fails. So I can say, well, I own this house, so if I were to default on the loan, then you take my house. And that's how I pay the loan back, which is a little scary to think about. But that is something that people do to start businesses and things like that. And then Kyla asked the question, if you have bad credit, is it possible to change it back to good credit? And the answer to that is yes, absolutely. It may take some time, but let's say if you, you know, miss paying on your credit card a few years ago because something went wrong, like, you know, a lot of people have ended up not being able to work over the last, you know, several months because of everything going on. And so a lot of people are dealing with that right now. They're missing payments on their credit cards or their homes and things like that, and that could affect their credit in the future. However, it is always possible to get back on your feet, start making those payments, catch back up, and then over time you start rebuilding your credit again. And you can rebuild bad credit. Yes, it doesn't stay with you for life as long as you take an active interest in fixing it. So that's a really good question. Okay, and so like an unsecured loan versus collateral, you know, the unsecured loan could be just me or you going to JCPenney's and saying, hey, JCPenney's, I need a credit card because I want to go buy, you know, that skateboard or these jeans or whatever right now. I really want this perfume, but I don't have the money. Can you give me a credit card? And by just virtue of my name, and they run a quick credit check, they say, okay, well, she's, you know, she seems okay, so we'll give her a credit card, and there'll be a small limit on it, and you can go get your jeans, but make sure you make your payments on time, or that might go on your credit report. So that would be like an unsecured loan. So if you want to move to the next page, Donna, we'll work through
Anybody
this.
have questions from those that we asked? Do you think, I'm going to ask this, and I am able to see the chat, so Tara, I can help you and give you a little breather from time to time. But how many think that it's a good thing to have 1 or 2 credit cards versus 4 or 5 credit cards? Ashley says 1 or 2. Kyla says 1 or 2. 1 or 2 is better. And you're right, 1 or 2 is a good thing to have if you can make those payments on those, 1 or 2 credit cards. The more credit cards you have, again, the more payments you're going to have to make, the more you're going to spend. And so if you can limit yourself to, 1 or 2, then you could still be able to use and make those payments. And, the goal is to always pay off whatever you spend. But again, if you can't, then it just gives you that freedom not to have 4 or 5 credit cards that you have to make different dollar amount payments, 100 on this card, 200 on this card, 150 on this card, and then you're just drowning yourself in credit cards. So that was something that came to mind as we were talking through this.
All right, good. So do we want to go over, let's go over the table real quick, and then we can talk about some of these different types of credit. So as we look through the type of credit, and you see who the lender is, and then possible advantages or disadvantages. And we kind of talked about this a little bit. You can buy a home, and you can get money from a bank, a finance company, a credit union. And advantages of buying a home are that homes can increase in value over time, and then interest rates for mortgages are low, and you're not paying rent for the rest of the time you live there, and you're actually buying it. And the interest is tax deductible. So when you go to do taxes at the end of the year, you get a little bit of money off for your interest rates on your home. But mortgages, are long-term, and they're anywhere from 15 years to 30 years. And it is kind of hard to get through the process, although worth it if you can get through. But boy, do they go through, and they do a lot of credit checking, and you have to show a lot of bank statements and paychecks from work and lots of stuff. It's a lot. But again, you're buying something that you're going to own. So, if you can get through it, that is definitely something that you might think it's worth it. And then car loans, having your own car is great when you need to get to work and back and just want to go where you want. But cars do lose their value quickly, and you can purchase a car on credit, and it may not really be worth all that much when you finally end up paying for it. Donna, do you want to go through the college loans and all of this?
Yeah, sure. The college loans, as you can see pretty much on all the college loans, personal loans, and the credit card, you can get them from your banks, your credit unions, savings and loans. The college loans, of course, the advantage is the college education is a good investment. It will always be, you will never be able to take away your college education or any type of education. So that's always a good advantage. The disadvantage is that students sometimes borrow more than is necessary. So, if your tuition is hypothetically $1,000, that sometimes people will borrow $2,000, and they'll have to pay back that $2,000, not just the $1,000 that they borrow for school, but they'll have to pay back the total amount. So sometimes it's a disadvantage to borrow more than what's needed. And new graduates can face difficulty in repaying large loans. So once you graduate, usually on college loans, they defer the payments until after you graduate. So once you graduate, then you have to start paying off those college loans, and they can get pretty hefty if you take more out than what you need, and not have them pay back. So the personal loans you can get from, again, the commercial bank, the savings loan, credit union, customer finance company. You can get all of those through that. And then the personal loans allow the individuals to purchase today a boat or vacation that they want. So on a personal loan, if I had a personal loan, I can pay for a vacation that I'm going to take next year and pay it off or pay on it until that personal loan is complete. The personal loans do have a relatively high interest rate, and sometimes they borrow more than what they should. Again, it's kind of like the college loans. And then the credit card, I think those come a little bit easier. It's not surprised on any given day that I probably get 3 or 4 credit card applications in the mail, especially if you have a good credit. You'll get more inquiries about opening up more credit cards. So those come very easily from consumers. Those you have to watch out. But they come from your bank, savings and loan, and department stores. Those are the ones you have to watch out. And then financial institutions or the credit union. The disadvantage on credit cards is that they are convenient to use and are useful in emergencies. So as Tara was saying about the wind that we had a couple of weeks ago and the tree in her yard, if that tree would have fallen, if the insurance would take care of it, but maybe Tara would have to pay a deductible, she may have to put that deductible on a credit card. So the insurance can finish paying what needs to be done with that. So that's kind of an advantage if you have that money on that credit card that you can do. And then credit cards provide a record of charges. So you can say that you do have to use a credit card for a class and you're going to get reimbursed for the class. Well, you have that record from your credit card statement or your bank statement, but if you have that, and then you can use that as a record that you actually paid for the class and get reimbursed. The disadvantages are the credit cards may have a relatively high interest rate, which we have talked about before, and some credit card holders may borrow more than the income should. You can actually borrow against your credit card, and that is a very, very high relative interest rate to pay back if you borrow against your credit card. That's not advised. But if you, by some chance, need to have that, then you need to have that. So these are the 5 different common forms of credit. Does anybody have any questions or anything that they would like to contribute to our conversation?
How many of you, all y'all have credit cards?
Ashley has a car payment, a debit card, savings account. That's good.
That's good.
So Ashley's doing a car payment, and so you are kind of experiencing that at this point. A debit card is a little bit different than a credit card, just because that's money that you have, and you're not gonna have to borrow anything if you don't have it. You have as much money as you do, and that's it. If you run out of money, there's no more to be had. So a debit card is a good way to start managing your money and making sure that you're not, overspending. You don't want to overdraft your account, because that's also sort of like getting money that isn't yours if you're spending money that you don't have. But yes, car payments are usually the first place people start, or a student loan or a credit card, a small credit card. So see if you have cars at this point. Some of you haven't started with credit. I'll be honest, I didn't start building my credit until I was much older. So I didn't start out with credit. I had to build it over time, and through going to school and buying a non-ratty car. I started with kind of junky cars when I was younger and just paid cash for them, whatever I could get my hands on. And I was a little bit afraid to build credit. I didn't understand it very well, and I didn't think I could get credit. And I was just sort of, working through kind of becoming an adult and working various jobs. And as I started finding that, my junky cars didn't last very long, or, I found myself in a couple of emergency situations, then I started thinking, okay, well, maybe I should borrow some money as as scary as that is, and get a car that runs, that's not going to fall apart in a year, and then start building credit. And the thing that I did find out was that the more credit I did build, just like Donna was saying, the more people started coming to me with just things in the mail like, hey, sign up for this credit card. Or, you know, you walk into the mall and you go into a store and they're like, hey, we'll give you 15% off if you pick up a credit card today. And that's how they get you. Which, you know, it is neat that you're able to do that, but be careful of those traps, because then all of a sudden, where you might have just paid cash and not done any interest along with that, because they offered you a credit card and a small discount on the front, you now have to pay whatever your interest rate is over time for those jeans at the Gap or Old Navy or whatever, you know. So that is one of the pitfalls of credit. But starting with a car and a savings account and a debit card and all of those things will definitely help you understand and manage your money well. And hopefully we'll talk through a couple of things on this call that will maybe start having you think about these things too. So what are the advantages of home loans and college loans compared to credit cards and personal loans based on that table that we just looked at? What are the advantages? Anybody can either answer in the chat or put yourself on mute. Convenience, that is an advantage. What is the advantage of buying a home? Loans and college loans are usually good investments, yes?
Yes.
Yes, because you think about buying a house eventually. I will own this house. It won't be for several years, but eventually I will own this house and I will no longer have a house payment. And whereas before, and this is the first time I've ever bought a house too, before I was paying rent, which was just, you know, borrowing a house essentially. And so I give my apartment person, you know, however much a month, and I never see that back. Whereas now, as a, you know, homeowner, eventually I'll be done paying for this house and I won't have to have a house payment anymore. So that will be extra money for me as I get older. Angel, exactly, you get a house, it's great. And then college loans too, you know, you're building an education, you're setting yourself up for the future. You might have a better job, you might get better pay at the job that you have now. A college education is definitely something that you can, you know, it's similar to credit. It speaks to all of the hard work you've put into yourself. But what are some of the disadvantages of credit cards and college loans from this table?
Maybe ask the question like, what disadvantages stand out for you?
Yeah, what stands out? What might make you not want to get a credit card or a college loan? You don't have to. You may pull out more than you need or can support, exactly. Difficult to remember payments, absolutely. I'm 100% on the auto pay thing, so they just come and get their money out of my bank account. Yep.
Yes.
Yep. High interest rates, not being able to pay back. Yep. High interest, yep. Not finding a job to pay the loan, that's always scary, yes. So those are all really good, you know, really good thoughts and really good things to think about when you're thinking about borrowing money. If you have a choice, you know, and you can make sure that you are able to pay back, you know, whatever you borrow, and there isn't a fear that you might not be able to in the future, all good things to think about. Very good.
I think this was an assignment that maybe the class or the team can do on their own. And that's this
Okay,
credit.
so, yeah, go ahead.
I was going to say this credit research, maybe if they're interested in doing this something on their own, they can kind of break it out and see what it would take or how much it would to take to pay for these different items, the APR and such. So that's something that would be a good exercise. Tara, you're on mute.
You can take the table and do some research on your own to reach out and kind of find out what this means to you. Will you go back to that table? So if you wanted to get a 4-year car loan, you can look up on the internet what sort of common car loan interest rates are for an average person in Albuquerque. You can find that information on the internet, as well as the annual percentage rate for a college loan, a 30-year home mortgage, what are the averages for a credit card, and a personal loan to pay for a vacation. So you're able to take this table and kind of do some research. Let's say you wanted to get a car from from like Garcia, Honda or Subaru or something here in Albuquerque. You can kind of look up on the internet to see what they might charge for average interest rate. And that's where it comes into, they run your credit report, and you can use all kinds of services that are online now just to see. Be careful, don't run your own credit when you're doing research like this, because one of the other pieces to your credit is that anytime a lender gets your social security number to see if you're fit to loan money to a card, that goes on your credit report, and that can stay there for a few years, and they call that an inquiry. And inquiries will stay on your credit report and may affect it negatively if you're applying for too many things, because that also speaks to risk. So when you're doing this research, don't use your own information unless you're actually looking to buy something yourself. I know a lot of you are starting to get a lot of, getting closer to getting cars and things like that. So you want to make sure that you're set up well to do that. So what's the secret code? What is that?
We've got passports that students are filling out for prizes. So we're going to be drawing for those prizes on Saturday.
Oh, how exciting.
How fun.
So I'm making the secret code cautious, because I am feeling that we have a group of very cautious, very smart students right here.
Me too. These were really, really great.
Yeah.
Yep. And I like the thoughtfulness that's behind all of these, and it's really cool to hear that a few of you have already bought cars and you're already making your way into that. And next up is going to be credit cards, and eventually a home, and college, and all of that stuff. So all of these decisions are things that you don't want to take lightly, and you want to be very careful about how much money you borrow for what and when. And if you can, go without something for a little while longer while you save your own money, that's recommended too. But sometimes you might need credit, and so all of these pieces are important to think about. Well, all right.
I'm going to stop sharing.
So I want to, does anybody have any questions about what we talked about before we end? Well, I hope that this was helpful, and I appreciate everybody asking all these good questions, and I hope you get some cool prizes on Saturday. That sounds super fun. I like cool prizes.
Yeah,
So
I think it's great.
Yeah.
And let me just bring back to the Science Fiesta. We've got presentations all week, and some super fun opportunities to meet real scientists. Air Force Research Lab just did a presentation this morning on their space lab that they've got going. They're part of the Space Force and lasers and so on. They're going to repeat that tomorrow evening. What else is going on tomorrow? Give me just a second. Science, sorry, it's right here. I just turned this off. Give me just a second. There it is. We've got some career talks going on around the world in VR. That's going to be a good one. That's specifically for young people and teens. That's with HP, Around the World in VR. That presenter is coming to us from Florida, and that's happening on on Thursday at 3 o'clock. Relearning the cosmos, just all sorts of great stuff. And then on Saturday, we have got, we have got the expo that's going on all day. And to say that the expo is going to be explosive is a little bit of an understatement. As I understand it, Oscar is going to be launching a trash can some 30 feet into the air. We're trying to look for a place to do that where we don't smoosh a car. So please join us on Saturday. That's starting at 10 o'clock all the way to 3 o'clock. And would love your feedback. I'm going to put the feedback form in the chat box, but it's a bit.ly. Go to feedback sci-fi. Let us know what you think. There will be we are doing daily drawings for prizes all week long for folks that fill out our feedback form. Let me write that down in the chat. It's a bit.ly, bit.ly/feedback sci-fi. So let us know what you think. And again, shout out to Fidelity and our other sponsors, AFRL, New Mexico EPSCoR, HP. HP is doing a presentation Thursday evening, ACMA, Blue Cross Blue Shields in New Mexico, Facebook, and Sandia National Laboratories. As well on the website is Science Destinations. There's some really cool videos there. Check out the map of New Mexico and Science Destinations. The science of breakdancing is not to be missed. And thank you very much to Tara and Donna. Please, everybody, unmute yourself and give a shout out to Tara and Donna. Thank you for spending your afternoon with us. And please, if you have any other questions, now is the time to ask.
Thank you.
Thank you so much.
Thank you, everybody.
Thank you, everybody.
All right. Thank you. Good luck to you. Have the good rest of your evening.
You too. Bye, guys.